Hi everyone, hope you're doing well out there. What a evening it was in the stock market. Oh my days, I must have sat down and spent a good 2 or 3 hours trying to read all these earnings reports that were coming out. It was mental last night. So many big moves. We're going to talk about some of them today, and I'll kind of give you my quick thoughts on them. It probably will be a longer video because there's that many stocks to go through, but I'm sure you don't mind. I was going to talk about a brand new stock I've started buying, but I will probably end up doing that on Sunday, I think. But yeah, today a lot of stocks report earnings, so we'll go through them all. We've got a bit of Mercado Libre coming up. We've got a bit of Grab, bit of a follow-on from Grab yesterday. Celsius, that was a monster move on its own. That could have been a video. We've got Alibaba that reported. We've got Block that reported. We've got New Holdings that have reported. So yeah, it's going to be a jam-packed video of loads of stocks. So which one to start with? I thought I'd start with my largest holding. Let's go with this one because that's actually having a pretty decent move. I'm going to give you my brief thoughts. I'm going to do a big deeper dive on the Patreon. So I'll give a little bit more information about the conference call, a little bit more detail in the earnings on there for you guys that like the more nerdy videos and the more information. Today, I've not gone through all the earnings fully yet, so I'll kind of give you my brief thoughts, but obviously I don't know the full facts yet from them, but from what I've seen, I'll kind of give you my instant opinion. So let's start with Mercado Libre. Like I said, my largest position out of all of these that reported last night. I think Mercado Libre is my 5th largest position in the portfolio. It was a bit smaller, but because PayPal's gone out now, it has jumped up Mercado Libre a place. And yeah, very big move from Mercado Libre. This will probably lead my portfolio to have a pretty good day today. The stock is looking like it's going to be up around about 12%. That will put me up somewhere like 90%, over 90% on my position that I do have. From my first buy, when I started buying it in 2022, my first buy will actually be up 232% since that time frame. So yeah, really good to see this from Mercado Libre. I think I gave you a preview on Monday, and what I said on the preview on Monday was what kind of came through on these earnings. They were unbelievably good. Look at this beat on the EPS. So there was a $5 beat on the EPS. That is incredible. Revenue growth of 37% year-over-year growth as well. Total payment volumes up nicely as well. Gross merchandise volume up 8%. Obviously a bit of an impact there of the FX impact. You take that out, 56% growth. Yeah, incredibly good from Mercado Libre. Like we said before on Monday, last earnings, the market threw this under the bus. It didn't like its earnings. It said, we don't like that you're investing for the future, even though that will bring more rewards. I said, if you're a long-term investor, you love that earnings report. You're buying this dip and you're thinking, I don't care what the market's thinking about short-term profit being affected. In the long term, this will bounce back and you'll get the rewards from that. And that's what if you did buy on that dip, you're getting those rewards, because since that time frame, it went up 18%. After the jump today, you're going to be up over 30% on that dip. And it just shows you sometimes, that's the rewards of kind of buying these great companies on this dip. And Mercado Libre, obviously they don't guide for EPS. So this is sometimes why you get these big monster beats from Mercado Libre, because they don't really guide for them, and unless they're guessing like crazy on what they're going to do, and then eventually you get the EPS come out and you go, wow, okay, that was a hard one for them to kind of predict. But the thing is because they're beating so much, what this is doing is it's just dragging the valuation so much cheaper. So the moment the analyst EPS forecasting this to go down to a forward P of about 46. Realistically, if you keep beating at $5 on your EPS every quarter, it's not going to be 46. Realistically, you're going to be all the way down maybe to the high 30s, which is incredible, because when you talk about a company like Mercado Libre with the profit they're growing at and the revenue growth of 37%, and then you think about the future, Mercado Libre is nowhere near done. They're kind of like where Amazon and PayPal were 10 years ago. So if you were to flick back to 2014 and you think about the last 10 years on how much PayPal and Amazon have grown by, Mercado Libre is still about to go through that cycle. They're still very much in their high growth stage at the moment, which is the really scary thing. And this is what I was talking about Grab yesterday. I made a video on Grab, and I forgot, because I normally don't make videos about other stocks and saying why I don't like them, but I did on the Grab video yesterday. And I always think it's useful because you guys can, because I always talk about what I like. So it seems like I like a lot of stocks, but realistically there's about 100 stocks I've gone through that I don't like, but I never talk about them. And Grab was that, and I thought, you know what, I'm actually going to post today why I don't like it. So you can actually look at things that I see why I don't like a stock on that one. But obviously people get defensive because obviously a few people own this stock and like, oh, you're an idiot and all this sort of stuff, and oh, but it has a really good cash pile. It's like, well, if you're talking about the cash pile as the main selling point, you know you've got a problem, because there's another 7 problems I listed, and having a good cash pile isn't going to save you from the other 7 points. But what I was going to say about this one is that this is what I don't understand about people that buy some of these stocks in this sort of space. Like, you've got Mercado Libre sitting here, like an absolute gem of a business. Look at the numbers that they've just come off with. Look at the valuation. It's realistically sitting towards probably a higher 30 forward times earnings. I don't understand why you would just have, in my opinion, Mercado Libre still to this day isn't actually a bad valuation. Like, I could easily see Mercado Libre going up another 100% in the next year alone, which is crazy when you say it like that. And I don't understand why people chase these stocks like Grab, because financially they're not great. What did the revenue do yesterday? Was it 16% growth? Yeah, the net income went up slightly, but it's what, 28 million? What was the EPS? 0.01. Why do people go buy them sort of stocks when you've got Mercado Libre sitting there? They've just beaten EPS by $5 alone, doing $12 of EPS. You've got revenue growth growing at 37%. This is triple of something like a Grab. But something like a Grab, for example, what did we talk about yesterday? What was it? 119 forward times earnings. Why would you go buy something like that when you got something like Mercado Libre currently sitting at 47 forward times earnings, realistically high 30 forward times earnings? Why would you go buy something like that when you got Mercado Libre sitting there? I don't understand a lot of people that chase a lot of these stocks that operate in foreign countries and going, well, that might be the next kind of big thing. Why do it? Just go buy the best in the business. This is the best in the business. And then once again, they proved last night. And that's why, a lot of people talk about, some of these other stocks that operate, that obviously are listed on the US market, but operate in these kind of more developing countries. I don't understand why people try to chase this one and, oh, well, that might do this and that. Just buy the big dog, especially when the big dog's a good valuation. I don't know, it's crazy, but yeah, insane numbers. So let's go on to this one. Celsius, this could have been the title of the video, couldn't it really? Yeah, 33% up in pre-market. Yeah, we're getting a bit of a bounce here, aren't we? Obviously, it's been a tough time for Celsius over the last year. Really, I can't believe it got to $22 actually the other day, and a little bit of a bounce up as we kind of got the news about the early release of earnings, and then obviously today looks like it's going to be a big jump today, up 31%. So yeah, obviously we made a video previewing this 2 days ago, was it? The earnings were brought forward 2 weeks ahead of schedule, which doesn't normally happen. Not much notice. As I said to you guys, something like that means there's some information they don't want leak into the market. That's always the key. If something's getting brought forward and they're not waiting for it to sit over the weekend, it's something information, it's deal related. I said it's acquisition related. Either Celsius are buying someone or Celsius are going to buy Pepsi. I thought it might be the Pepsi one because obviously we've seen the links and the tie-ups a little bit, getting a little bit tighter for them, and the valuation. If Pepsi are going to go in for it, now is the time that they're probably going for it. And it turned out it wasn't. It was actually the other option, which is Celsius did acquire someone, which was the big surprise. So yeah, Celsius reported their fourth quarter earnings, which actually weren't too bad. Retail sales were up to 22% again. So shows you that there's still good growth there, past the inventory issues. But that wasn't the big thing. The big thing is they did acquire Alani, I believe is how you say it. They did acquire Alani, which is another energy drink company. This one has actually been doing quite well. There's been a lot of claims that this is actually taking market share of Celsius, and that's one of the reasons why Celsius has struggled a little bit at the moment with maybe a little bit of a slower growth rate than what it has historically done. Obviously, they still seem to be doing okay, but not as good as what it is. And they're saying that these guys are one of the reasons why, because they've been taking a bit of market share off them. My original thought is that I've seen this in places before. I'm sure I've seen it in the UK in a couple of places. I think the product, I've never tried one myself. I think they're normally a little bit cheaper than Celsius in the supermarket. So I don't know if that will potentially maybe change the energy the margins at all a little bit at the moment. But looking at the deal, They paid 1.65 billion for it, which is pretty decent size because Celsius is a 6 billion market cap, so it's a big chunky buy. I thought originally the market might throw it under the bus because the market tends to not like big acquisitions like this because it's like, this is risky, this has got to work for you. But it went, no, actually we're quite happy for you to buy that one. They claim it was a good value. They said they bought it for less than 3 times of 2024 net revenues, which 3 times the sales isn't too bad, but I think the times sales metric isn't the best one to use. This is a bit of a better one. So approximately 12 times EBITDA 2024 numbers, which probably isn't terrible, to be fair. That's not a bad valuation, to be honest with you. They said that they do expect it to be cash EPS positive in the first full year. So I would expect so, because if it's some EBITDA positive, it can't be too hard for this to get up to positive EPS. As well as that, you would expect that as soon as they stick it in that Celsius supply chain line, they'll probably do quite well from it, I would expect. So they are going to do the deal with cash and stock, so 1.275 billion in cash, and then they're doing the rest in stock, as you can see here, 500 million, as you can see, which not too bad, I guess. They are doing 900 million through a debt refinancing, so we are going to see some debt come on that Celsius balance sheet, which, I prefer a clean balance sheet, but if they can get it at cheap rates and they think they can make it work, I think I'll be okay with that. The rest is going to be in cash of 375 million of cash. So one of the big criticisms I've had of Celsius over the last 12 months, I think I've told you guys, is that I don't understand why they've not done a share buyback. You've got nearly $1 billion of cash sat on that balance sheet. Go use it. Go buy back the stock. Look at how historic low it has been. So the fact that they have used the cash pile up for an acquisition kind of says why they weren't doing a share buyback now. I'm glad they kind of are dipping into that the cash pile, because 1 billion is a lot, and obviously the company's pretty decent profitable now. You're talking the company's throwing off 200 million-ish a year. You're going to have a lot of cash going onto that balance sheet. Start using it for something. I thought the share buyback would have been the right idea, but obviously they've gone with the acquisition. And if the acquisition can work, sometimes a really good acquisition is better than any sort of special dividends or share buybacks, because you get that one off with that kind of dividend or share buyback. But if you get an acquisition that works and translates into revenue every year, profit every year, that profit that you generate from that acquisition can pay for multiple share buybacks going forward. So if you can do an acquisition right, that is the best way to use your cash pile. So it's good to see them using it. I got to say, they've got probably about a 1 billion cash pile by the time this year has closed. I could actually check the fourth year earnings and it'll say exactly what cash pile they're on, but it'll be close to probably near 1 billion-ish. So, I mean, that's a pretty hefty cash pile. I'm unsure why they only used 375 million of it on cash. Maybe they could have gone a little bit higher on that cash, using that cash up. But hey, I'm getting really picky now. And with 900 million of debt, I think that's quite easy for them to eventually pay that debt off, isn't it? Because they'll still have, whatever it is, 600 million of cash. They generate about 200 million of profit-ish a year, forecast to go up. So it would only take them a couple of years to pay the debt off. So it's not ruining the balance sheet at all. So I'm fine with how they have, what they have paid for it, and I'm quite fine with how they've financed it. Looking at the actual company itself, is it a good purchase? So if we look here to say that retail sales of Alani, according to Mulog Plus Convenience, increased by 78% year over year. Wow, impressive. And also in the last 4 weeks was a 4.8% increase, 200 basis points from the prior year. So this looks like Alani is growing fast. So we heard before that one of the concerns was that Celsius was losing market share to this business, and you can see here that this company was actually probably outperforming Celsius on a sales point of view. So the fact that they've actually bought a company that could potentially be growing even faster than Celsius is actually really positive and interesting and a surprise. I got to say, I did look at this deal, and I'm going to have to think on it and maybe look on it a bit more, but I don't know why they've sold, because I think the company here I don't know if I have the date up still, but it says, can I find it? Yeah, so it's a relatively new company. It's 2017. So, I think it's still co-founder led. I don't know why they'd want out of the business. The company is pretty new. I'm sure they've still got a good stake, and I bet the co-founders are still pretty young. Why would you not want to still scale this business up? Maybe you'd want to try and IPO it on the market, you get a nice injection of cash from doing it that way. Maybe they just want rid of it. I don't know. I'm surprised because the fact that it's growing seems to be doing so well, and yet they've sold it off to Celsius. Maybe they just feel like Celsius is going to be the better company in the long term. Maybe Celsius could take it to levels that they can never think that they would be able to take it up to. It's a surprise. It is a little bit of a surprise, especially for the valuation as well. That the kind of the valuation that they're picking it up for as well. It's not like a crazy kind of valuation here. So yeah, I didn't really expect this to happen, but I've got to say, looking at the numbers at the moment, like I said on the Patreon, I'm going to have a bit more information. I'm going to look into it a little bit more and listen to what the management team is saying about it. But I can't complain. I can't complain with this acquisition, and I can see why the stock is going up, because it's a company that seems to be growing faster than Celsius, a big rival. It looks like it's got great revenue growth. They've paid a good valuation for it. They haven't really wrecked the balance sheet. It looks like it's going to be straight away generating positive EPS to the company, and I'm sure that Celsius will probably be able to take it up a level with its distribution, its factories that it has, the gross margin expansion probably on the product as well. So yeah, it looks good. I can see why the market likes it. So I'm probably gonna have to rerun the numbers on it all, because obviously this is going to change the numbers completely on it. So yeah, I think I like it. I can see why the market's kind of having a little bit of a rally up on it at the moment. Alibaba reported earnings the other day. That had a good jump, up 8%. Once again, the pre-market rally is continuing, with the stock up 4% in pre-market. It is now going to end up in $141. And it just shows you, doesn't it? Like, you can't predict the stock market, can you? If I was to tell you that Donald Trump was going to come in as president, and what do you think Chinese stocks are going to do? Me and a lot of other people, I'd have been saying it's going to be a tough time for them. And yet, since that's happened, the stock is up 60%. And obviously, when the stock opens up today, it's going to be up even more than 60% year to date, which is just crazy. And it just shows you as well, that it's been a tough time for Chinese stocks. They peaked during 2020. $300. I remember selling out half position during that time, making a really good amount of profit, and the stock just continued to fall and fall and fall. And I remember, I can't remember exactly when I started buying Alibaba, but it was a lot higher than where it was right now. And I remember it just kept falling and falling and falling. And I kept buying and buying and buying, and I've not got too bad of an average, but I'll be honest with you, I think I lost a bit of confidence to keep buying it. I think I could have probably bought more aggressive than what I probably did do, and I think the reason why is just because I saw the dip going down and down and down. And this is what I say all the time to you guys, and even sometimes, even as you can see here with me, I'm sometimes go, fucking stop going down, man. And this stock went 2 years of going down. That's the big thing. When in this game, you got to realize sometimes there's these periods of times where stocks just go down and down, and it happens for 2 years. I was talking about JD Sports and B&M the other day, and like people saying, oh, it just goes down, and it's like it could go down for another 2 years yet, guys. You got to have the patience, but eventually. The fundamentals, Alibaba since that time frame has continued to do quite well financially. The revenue's growing and the profits been growing. If you find, and the valuation just got to historic lows, that combination of factors, you'll eventually get rewarded for it. And as you can see with Alibaba, you've started to get the rewards, especially if any of you guys were brave and you were constantly buying in that dip. If you're constantly buying in that dip now, you're laughing, you're up major amounts. And even if you didn't catch the bottom, I mean, there was a good chunk of period of time here. You're talking about from 2022 to even 2024, some of 2024, the period of where this stock stayed in that like $60, $70, $80 range. Even if you didn't catch the bottom at like $69, if you got some shares in that $70, $80 range, I mean, let's even go $80, you're up 64% during that time frame, and then you had the jump in today, you're probably going to be up even more. And it's just patience, guys. And sometimes the jumps even come when you think the jumps come in the darkest days. When you've been sat on that stock and basically, the whole market's rallied and you've been on that stock for, 4 years and it's not done anything. And then the time when you go, well, if it's going to rally, it's not going to be now. And then the stock goes on to do its rally. It's crazy. Patience is the number one factor, for my opinion, in the stock market. If you don't have patience, you will not be successful. And there's going to be a few people that are quite happy with the jump in the Alibaba share price at the moment. And I got to say, the earnings, I looked at the earnings and I thought this, I've not looked at them fully, like I said before. That's obviously, I'm going to go through them fully and then do it on the Patreon. But from what I've seen and scanned so far, these numbers look very, very good to me. I could have argued the case that the stock weren't even up even more than this, which is, saying something. Maybe that's why the jump's happening again today. But the EPS, really good beat. Revenue back into the higher range of the 8% growth, which is obviously what you want to see. I think I've not got it. Let me load it up for you, because there was a statement in here and I was like, wow, that's a statement. That's a really big statement from Alibaba. So what this said here is that our cloud revenue growth went back up to double digits. 13%. Now, one of my big criticisms on Patreon and on Patreon when I've done the earnings reviews, and if any of you guys on Patreon listen to them, we need the cloud growth to come back, and that will do very well when that comes back. And what we're seeing now is 13% growth. That's great. But the scary thing is the wording that came afterwards. So they said, with AI-related product revenue achieving triple-digit growth for the 6th consecutive quarter. So these guys seem to be suggesting, hey, we've got an AI product and it's doing really well for us. This is the first time. I listen to so many conference calls out there, and so many conference calls at the moment keep going, AI this, and I look at some of these earnings from these AI products, and I go, okay, you're saying that AI is doing this, but tell me, like, what numbers are you doing? Give me numbers. Like, it's all right saying that it's doing very well, but until you tell me numbers, I can't believe you that it's doing well. And obviously, there's no financials, because I'm sure the financials were, not big numbers, so that, they're probably hiding it a little bit. So it's still not major numbers. But what I'm hearing here is that the products they are using are getting used, and they're growing by triple digit. So there's got to be some sort of acceleration going on there. And then I combine that to the cloud revenue growth, and I'm going, well, this cloud revenue growth isn't just coming from nowhere. It's coming from somewhere. And if you're telling me that AI-related products are actually growing triple digit, that suggests to me that some of that revenue growth is translating from that big AI products, those AI products that you've got at the moment. That looks really, really good. Now, the positive thing as well, which they followed up with that, is that looking ahead, revenue growth at the Cloud Intelligence Group driven by AI will continue to accelerate, which is great. So this says to me that they're seeing this AI adoption coming on strong, and that, hey, this cloud revenue that we have at 13%, yeah, it's showing some good improvement, but hey, it could get even better going forward. That is exciting. The market will love that wording, and it looks good for Alibaba. So it's been on a good run, but I tell you what, if they keep putting words in like this and showing numbers like this, and that cloud growth's coming back at the moment like that, it could go on a little bit more than this at the moment. So that's really good from Alibaba. Like I said, I've not gone through it all yet, but from what I've seen, that is the best earnings I've seen from Alibaba for a long time. Next one, new holdings. So a relatively newer position into my portfolio, a little bit of a smaller position into my portfolio. The stock is down around about 8% in pre-market. I have no idea why. Like I said, once again, I'm kind of like to repeat myself a little bit. I've not gone through the full earnings, but from the numbers that I have scanned, because I am going to buy this morning, I'll let you know that. Well, I think I've already bought, to be fair. I think my order's already gone through. But new holdings, I have no idea why this went down. I was looking at Mercado Libre, and, we talked about stupid drops. Last earnings, Mercado Libre had a stupid drop where it shouldn't have gone down. And obviously now it's rallied up from that time frame. I'm looking at something like a new holdings, and I'm seeing like Mercado Libre flashbacks. I'm looking at it and going, I have no idea why you've gone down off earnings. I looked at the revenue growth. Revenue growth was up 24%. And where's the net income? Yeah, adjusted net income increased to 610 million from 395 million. That's a crazy. You're nearly getting a double up on the net income there. this is what happens. I don't know if the market's throwing its toys out the pram because like it missed revenue by a slight amount and it's going, oh, well, you missed our numbers, so you missed by 1%, so we're going to throw you under the bus. That's not how the market works. I mean, that might work. That's how the market might work for people like analysts that are like looking at these numbers. That don't work for me as a long-term investor because I'm looking at this business here and I'm thinking 24 forward times earnings. The revenue's just gone up 24% year over year. The profit's nearly doubled. All of the stepping stones are going up in the right direction. And over a long period of time, if those stepping stones go up in those right directions, what will happen is the share price will follow those financials. And that's what we have at the moment. The financials are going up in the right, and in my opinion, going up very good. A lot of businesses which still growing at 24% and the net income will going up at that sort of range. If that keeps happening, that's what will happen eventually. It will go up and the share price will follow. I mean, the only thing that I'm looking at is going, you know, there was a slight miss there. Is that because of the currency impacts? Is that why it's been a little bit weak? But if you do look at the currency impacts right now, you can see it was a pretty tough time for them during that fourth quarter there. But if we're future thinking, one thing that probably worth pointing out is that the currency impacts got the worst in December. Since then, it's actually been getting a slightly better in the likes of New Holdings' favour. So if these earnings are a little bit weak and it's weak because of the currency impact, and the reason why they're throwing it under the bus is because of the currency impact, well, what's about to happen in 3 months' time? Well, actually, to be fair, Q1 earnings are not that far away. We're already 2 months really into Q1 and we close off in a month's time, obviously at the end of March, and then we get the numbers in April time. So we're realistically looking about 2 months away, 8 weeks away. In eight weeks' time, we're about to get the next set of earnings from New Holdings, and maybe because the numbers look a little bit weaker at the moment, because I said look a little bit weaker, they don't look weaker to me, but maybe analysts are forecasting it throwing it under the bus because it missed the numbers slightly, and maybe some of that was because of the FX impact. What we're going to have in about 8 weeks' time is that's then going to be a massive tailwind in Q1. So we'll see what happens there. I think that could be something that's, you know, maybe missed out at the moment by the market. And then on to the last one, which is Block. So this is probably the weakest one out of them all. I thought Mercado Libre's earnings were good. Celsius earnings, from what I can see, look pretty decent. Alibaba's earnings were fantastic. New Holdings earnings look good. Block's earnings, I've not gone through them all to see what's kind of going on there. There might be a number further down, which kind of makes sense, but I was very disappointed with Block's earnings. I obviously got rid of PayPal, and then I thought, okay, is there potential here to make Block a higher kind of fintech business in my portfolio? And then I was looking at them and I was disappointed. You know, there was a big miss on the non-GAAP EPS, which you don't want to see, especially when it's supposed to be right now focused, quite a bit on the profitability side of it. The revenue, not even really, I would say, a small miss. That's a pretty bigger miss, I would say. 230 million miss, and then obviously only revenue growth of 4.5%. Now, obviously, I criticised PayPal massively previously because of the slowing revenue growth, and then Block comes in with 4.5% revenue growth, which is not great. You know, I wanted Block, in my opinion, to grow high single digit, low double digit kind of revenue growth here, and then I'd be interested in it. But I don't understand what's caused the big slowdown in Block. Is it the competition side of it? I don't know. That's one where I'm on the Patreon. I'll go through it and I'll have a little bit look through the numbers and kind of go, what kind of went wrong with this here? But this was a report that I didn't really see coming, and it surprised me how poor it seemed from Block, to be fair. So not the best from them guys. So we've got to see what's going on there, which is worth pointing out. That I was a bit disappointed with that one, and it was a stock that I was kind of considering, do I start building up my position a little bit more on it? But after those earnings, I'm certainly not, and I'm certainly not until I have the reason why the numbers are looking a bit at the moment. But apart from Block, it's been a pretty good week. I can't complain too much. Obviously, Mercado Libre being my 5th largest position, up 12%, looks absolutely fantastic. Good to see Celsius having a little bit of a bounce at the moment, and obviously that acquisition that they're making certainly spices things up a little bit at the moment. Alibaba looks like it's in the best place it's been for a long time. New Holdings seems to be giving a bit of an opportunity out there at the moment today, having a drop which I don't think it probably should have a drop on. And then the only one that's been really disappointing is Block, which didn't look the best out there. But like I said, I'll have to go through that one in a little bit more detail. So yeah, on the Patreon, I will go through these in a little bit more detail. I'm thinking of probably giving Celsius its own video, and then I'll do the rest of the earnings as we go along anyway. So if you're on the Patreon, keep an eye out for that video, guys. And then apart from that, I'll probably see you on Sunday, where I do talk about a new stock that I have been buying over the last few weeks. So yeah, thanks for watching, guys. Have a great weekend, and hopefully I'll see you on Sunday. See you in a bit.